So we have some conflict in the Middle East. Surprise, surprise. What should retirement investors do about it? Should they be making adjustments to their investment portfolio? When it comes to wartime, should we be doing anything differently? And then in today's show, I want to talk specifically about the Middle East and whether or not conflicts there are any different than anywhere else. And a little alert, a little teaser, they are. And you should consider them in a different light. Speaking of light, let's bring in the guiding light to the podcast, Tony Shore. Tony, before you comment on this Middle East conflict, because I know you got a lot of thoughts on it, I got a phrase that I'm going to coin just for you. You ready? Don't sell the farm when they drop the bomb. But I'm going to do it in my Boston accent. My wife's in Boston. I went to college there. It sounds better. Don't sell the farm when they drop the BAM. Go Sox. Go Red Sox. All right, Tony, I'm going to tell you to unmute yourself, join the show. What do you think?
That's all I know how to say in Boston. Park the car.
Go Sox. Okay, so we got some Middle East conflict going on, and I want to talk about it.
All right.
Because, I'm an investment advisor. I got people with a lot of money in the stock market.
Yeah.
How many phone calls do you think I got about this recent Middle East conflict from my clients?
From your clients? I don't know. You've got them pretty well set up and trained to weather market volatility. So maybe not as many as others, but something like this where it's us basically going to war against another country and it's affecting oil prices drastically already. I don't know, maybe a few, but you have your people set up.
So far, none. Far, none.
There you go. See?
So why am I talking about it? Why am I talking about it? Because my clients do listen to this, so they're waiting for me. But also, I got people that are watching this show that are maybe have some questions about it. I'm going to try and give my take on it because it's probably similar to a lot of other advisors. But let me give you my take on it, and we can go back and forth. I just want to start out by saying, when it comes to war, World War II, Korea, Vietnam, the markets drop. When Pearl Harbor happened, that day, man, the markets tanked.
Well, sure.
And if you look at it from a global perspective, World War II, markets tanked, came back up. Korea, markets dipped, came back up. Vietnam was a little shaky because that one was not, it was choppy. It wasn't so, like a V. It was, a lot more volatile. And it lasted a little longer. But in general, the big picture, Tony, wartime represents a small dip in the big picture. If you look at the chart, I'm not going to put up a chart here. Maybe people, because that would take away from Tony, visual. If I put up a chart, though, you'll see the long-term trend is up. And you'll see where the wars are, the dip at the start, and then you finish up. Right? So, and you've heard this before. War, don't panic. It'll all come back. But you've also heard that about the stock market in general. Ride the wave. It'll always come back, right? General trend is upward. But I want to talk specifically about the Middle East, because should there be any difference in this? We had Yom Kippur 1973 when Tony, you were just a little young pup then. You were still you were still in diapers, maybe.
No, not quite, but yeah, probably. I don't know.
I mean, most of the retirees were teenagers at that point. Most of the people that are looking at retirement, they might have been even at teens or younger. So that 1973 may be a little dated. We had the Gulf War in 91, Iraq in 2003. We had Hamas-Israel conflict in 2023, so that was recent. And now we have Iran in 26. So what I want to do is, I want to take a little bit of a deeper dive into this, Tony. What do you say?
It's time to dive deeper.
So,
I can never get used to that.
Middle East. Let's talk about how they're different and why people should be approaching this a little differently than your typical World War III type style.
Jeepers.
Right. They're shorter dips when it comes to the stock market, and it's more focused on oil. You already hit it. You already said that right away. First thing you said was oil spiked.
Yep. Gas went up exponentially. Oil spikes. And the problem is, though, Dan, if it goes on too long and it keeps affecting the oil prices, if oil goes up, it affects the cost of everything. I mean, plastic is a petroleum-based product. So everything with plastic in it goes up. Everything you ship goes up because shipping costs go up. So, and that Strait of Hormuz, or Hormuz, however you say it, is, I've heard it both ways, that's tricky too. Price of bottled water. A lot of bottled water goes through there for a lot of the world. And prices of bottled water are going up in certain places. So,
and according to the Maha movement, there's a lot of microplastics in our food. So food prices might be going up too, just because of the plastic that's within. I wonder if there's any dolphins in the Strait of Hormuz. I wonder. Anyway, let's talk about 1973, because that one's an outlier, in my opinion. The oil prices shot up 300% during that time. And the stock market was down 40% that year. And that was different, though, because we had an oil embargo. My dad told me stories about how he had two different license plates that he would carry with him. One that ended in an odd number, one ended in an even number, so that when he needed gas, he could just switch the license plate. Throwing my dad under the bus there.
Oh, no.
Sneaky.
He gamed the system to get gas. Yes. I love that.
During the summer, I remember him telling me, because when I wasn't born, but they were... my brothers were little, and we went in a little RV, and you needed gas to run that thing. So he couldn't wait a day to get gas. So he would have to switch his license plate each day, depending on,
because they checked your plate, right?
Right. Yeah. Odd and even number. But that was different.
Oh, I get it. I mean, odd number plates get it one day, even numbers get it the other. Yeah. That's how they rationed gas when there was a gas shortage. Yeah. And I remember during Carter years, the Iran-Contra, not Iran-Contra, that was Reagan, the Iran hostage situation. Gas went crazy too.
Right. And so the huge spike in oil back then in the 70s.
Yeah.
Coupled with a market drop immediately of 40%. Now it came back. It came back, right? 1990, we had the Iraq War, and oil spiked 170% or more. So not as bad, but still quite crazy, right? Yeah. It's a big spike. And the stock market dropped 15%. So not as bad as 40%, dropped 15%. And then we had, what was it called? The 91, Desert Storm. Remember Desert Storm? Was that Schwarzkopf? Remember that?
Yep.
Was that him? I think it was him.
Yes, it was Schwarzkopf. Yeah.
The day we started that Desert Storm campaign, oil dropped 33% in a day.
Yeah.
Because people are like, all right, adults coming in the room, it's going to be solved. And oil dropped, but it spiked big time before that.
Yeah.
And then the 91, during Desert Storm, the markets were up over 25%. Right? So we're starting to see a little bit of a trend. Now let's jump to 2003, the Iraq War.
You went from Bush Senior with the Gulf War to Bush Junior with the
Iraq, right?
Yeah.
2003. The market was dipping prior to that war, and then yet we finished over 25% that year.
Wow.
And then and it dipped. The oil prices dipped. Went up, but not crazy like 70s and then 90s. And then the most recent one, besides the one we're having now, was 2023. I was looking at this because I didn't remember. That's how insignificant. I'm not going to say insignificant in terms of global perspective, but in terms of the markets, the U.S. markets dropped big the day that the Israel-Hamas major problem happened in 2023. That day, the markets opened, the futures were down big.
Yeah.
Stocks
That was
finished up
Israel.
that day.
Yeah.
Right. The markets were up that day. And oil spiked less than 5%.
Right. But that was
And now
more that
we weren't involved.
wasn't as much
US
about
was not
oil.
involved.
Yeah, the US wasn't technically involved, and that technically wasn't really affecting oil fields where they were, that whole thing.
Right.
But now Iran, that's a bigger
Right. It's
dog in the
bigger.
oil game.
And we're in there.
Yeah.
And we're in there.
in there. We're the leaders
But
of
what's
it.
happened? And what's happened? We had oil spike. But
The markets
is it
have
going to be
actually stayed
sustained?
fairly steady. We've had a couple of
Right.
big down days, but then it pops back up. I mean, on the Monday after it was declared and we attacked, I thought, oh man, the market's going to really drop for this, at least this one day. And they really didn't. They dropped at the beginning of the morning and they made it up by afternoon, so it stayed even.
And you'll see the markets dropped after that, mostly because of jobs numbers, not necessarily conflict. And I think what's different here, and you'll see oil prices are going up, right? Because that, like you said, that area, that geopolitical area, there's a lot of oil that goes through there.
Yeah.
But not for the US.
Yeah.
We're the number one supplier now. We've changed since the 70s.
Yeah.
Maybe we learned our lesson to not rely on foreign oil. And so we can weather the storm. Now, globally, there's a huge supply problem because there's war going on in that area. So India, China, places that get their oil from there are going to struggle, and that's going to trickle down to us. We're not going to be unaffected, but I think it's not going to be as crazy as it was in the past. I think we're becoming more self-reliant, or we have a better supply chain and a better mechanisms in place. And I think also, and this is all conjecture, but I think that our military has gotten to the point where we're not necessarily going to be an unknown length of time drawn out. It's going to be boom, in and out. We got directives. We have technology now that we could be more precise and less unknown, because that's what's driving the market down, is the unknown.
Right. I don't know. That's the one thing you've said so far where I'm like, I might disagree with that. That's my concern, is that it will get drawn out. It's already went on longer than I thought it would. I thought there would be some resolve or a regime change pretty quick after we. I worry about it dragging out. No one has a crystal ball, and hopefully you will be right. I see your point, and I think you might be right, but I'm a little concerned about this one. There's a lot of complexities. Things, like you said, things have changed geopolitically. And so we'll have to see, how long will China, deal with exorbitant gas prices or a gas shortage before they do something, or before, we don't want to get into what ifs, but you know what I'm saying?
Right. And so I don't know, but I think that's why we've had a more tempered movement. A lot of people aren't panicking.
Yeah.
There's always going to be some panic and the markets dip. Oil prices spike, right?
Right.
But it settles out a lot quicker than it has in the past, because
the market's more resilient than it ever has been. I think you don't see the 40% drop when it used to be, even 20 years ago, when somebody sneezed in China. You know my line: if somebody sneezes in China, it affects the markets here in the US. It's like, how does that happen? But it's usually a quick dip. It's not huge, and it goes back, because the sneeze in China really doesn't drive markets, but it can affect it super short term. And I think we've seen that, but I see the markets being more resilient. I thought, the president basically declares war on Iran and starts bombing on Friday night. And then Monday, the markets are closed. I think we purposely do that, because the markets wait till the markets close, then do it. And then Monday morning, I thought the markets are going to tank like a rock. I thought we'd see like I thought we'd see a 20% drop. That's just, my hunch. But the market stayed even if you look at that day, and throughout the week we've seen some big downturn yesterday and the day before. It went back up the next day after Monday, then Wednesday it goes back down, Thursday it's down, then it goes back to even. It's just bumpy. It's not any drastic corrections even yet.
Right. There hasn't been that panic over the past, and maybe there won't be, Tony. Maybe this will get settled quickly, and maybe the global economy has softened any sort of short-term spikes because there's more interacting pieces going on.
Sure.
Okay. So Chicken Little says, he thought the market was going to collapse, but let's talk about what we could do. What could somebody do in this? Do we sell? Do we buy? I tell you what, you don't panic, right? That's always my lesson, and I'm pretty laid back about this type of thing in all markets. Again, that's my job. I'm trying to keep people from making rash decisions, but it is helpful to have a plan in place so you're not like, ooh, what am I doing? I didn't just retire and have all my money in oil stocks and all of a sudden, or in, what would I do? What should I do? I'm saying, what do you buy? I'm saying who's going to win, and you got to bet on the U.S. to win. That's probably number one. But if you had to buy something, Tony, and I know this is you, I'm answering your question because I know off air you're going to be like, tell me what to buy. Tell me what to buy. I'm really into this because you're really aggressive. You're really risky. You want the answer, right?
I do want the answer though.
Right. So what do you buy? If you had to pick a winner, I would look at history. What has done well when U.S. enters some sort of conflict? Gold, precious metals do well. Why? Because of the uncertainty. When people are uncertain about what's going to happen, they flock to the safety valve, which is precious metal, gold, right? So look at that potentially. Or what happens when war starts? Who makes money off of war? War providers, war companies that make weapons, defense company. I'm not saying defensive stocks. I'm saying defense stocks. Companies that are military related.
That are the Department of Defense, they're contractors. That's who you're talking about. Yeah.
I think it's War Department now, Tony. Come on, get with it.
There's well, whatever. So I've heard it both ways. So the thing is, I mean, we've already heard all the stories about how, our munitions or ammunition is low. Okay. Who's making that? Because they're going to
making that.
Even if the Iran conflict ends tomorrow, we're going to have to restock. Those companies are going to get new big contracts. More money is going to be spent to replenish the stocks. And so the ballistic missiles, things like that, ammunition, those things are going to go. Drones. We're going to need that stuff.
And so who do you buy it? Usually when you're buying it, you and I, it's too late, right? You have to anticipate.
By the time you hear about it, it's too late.
Right. And during the Israel-Palestine conflict 2023, I think Israel's still looking at, there was a bunch of people that bought weapon stocks prior to it, like a week or two prior, and they made out big, and that's under investigation. So
sure,
there are people that are running the game, but But I'm recommending that you don't necessarily do this. Just be aware that this is an option.
Right. Well, first, this isn't individual. First, Dan, we have to say you're not giving any investment advice to any individual listeners out there, because you'd have to get to know them, their personal situation, where their holdings are currently at, before making actual buy this stock, do this, move this money. We're just talking in general terms what might happen and why. Well, but again, like you said, don't go do this. That might be an emotional reaction, and maybe it's by the time you're watching this, might be too late. Those stocks might be way high. You'd be buying high, and you don't want to do that either. But I think you have a great point. I think those defense contractors for the Department of Defense are going to be, or war, especially whatever you call it.
Your thought is this is going to drag out, and if that's the case, well, I'd like to own some companies that are going to make weapons and ammo, right?
Yeah.
So in general, Tony, I would say military conflicts cause panic. It's been coming down though. I mean, people aren't as panicked as, Now if
And that's
there was
not necessarily
if
a
there was
good
another
thing.
Pearl Harbor,
We're
right,
numb
right.
to it.
Right. Well, we're numb to it, but it's not really affecting people. I mean, Tampa area where I'm at, we got CENTCOM here. So it's a lot of this is being run out of Tampa,
Sure.
right? Which is crazy. We don't have the boots on the ground, is what I'm saying. We don't have the horrific death that's happening to U.S. people. So they don't feel it, right?
Yeah.
It's happening over there.
Well,
So
yeah,
there's
even
not
if
as much
one U.S.
panic in the
life
US
is lost,
markets.
though, even if, I do want a caveat. You're talking about it from a financial standpoint, and that's good. People need to hear what you're saying. But just, I want to let people know that Dan and I, it's a serious thing. Nobody wants to see any type of war where innocent people or civilians or even soldiers die. We don't want that. We wish this had never happened, but sometimes to help the people, there was a horrible person in there. Who knows what the reasons or the outcome, what it'll be? We'll wait and see. We really can't do anything about it right now, but it's not, I'd rather this hadn't happened. But we need to look at how it's going to affect if it's going to affect my retirement, you need to be responsible enough. Even if you're very against what's happening, you have to also, it may seem selfish if people, 6 U.S. soldiers lost their lives, or 4 or 6. That's the serious side of it, and we're not making light of that. But you also can't ignore your your own financial future, right?
Right. Even especially if you're not yet retired, and you're like, "Whoa, what am I doing here?" Don't panic. Don't panic, and it's never good to panic. And do you try and capitalize on the defense stocks? Do you capitalize on the oil price movements? I don't think so. History shows that the markets are going to shrug it off.
Yeah.
You should shrug it off. I'm not saying, like you said, Tony, don't be flippant about the loss of life and all that. When it comes to stocks and investing, don't react to something like this, because in the long run, you're going to question yourself, why did I do that?
Right.
And if you're going to bet on anything, bet on the U.S. to win and come out ahead.
Yep.
Because that is the way to go.
Yeah.
Long term, that's the place to be. So I'll end on that note, Tony.
That's a good note to
Thanks
end
for
on.
another good show. Hopefully this ends soon, and it'll be a drop in the bucket in terms of time for us. You never know, but don't panic. Grab a towel.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.